I will warn you before we get into our first panel that I will be running a very tight ship. And I have all sorts of props. I will give speakers a 2-minute warning. And if needed, I will serenade them off stage like so if they go over time. Other than that, everybody else should enjoy the show.
And so we are starting to see this continued steady move up and to the right in terms of institutional interest. And I think it augurs well for certainly everyone on this call, but also the entire ecosystem. So we're happy to be playing a role in helping drive that forward.
When we look at the investing landscape, the way that risk has been priced and evaluated has changed in the last 2 months, right? Assets that we thought were not risky, all of a sudden it turns out were risky. If we look at what happened with the oil ETFs, right? The fact that oil futures could go negative, that's something we had never seen before. The commentary from investors was always, look, Bitcoin's way too volatile and it's way too risky. Volatility is highly relative and every asset class is volatile right now. So what we've seen is that the volatility objection that a lot of investors had to Bitcoin has gone away.
Now that many people are not worried about inflation, I'm going to worry about it more. Not in the short term, because I do believe we are going to see one heck of a productivity increase coming out of this crisis. But I am beginning to worry about it 3 to 4 years out. ETFs took off after 2 crises. So tech and telecom bust was first, and then 0809 meltdown. And they took off at an accelerated rate then. This coronavirus is, a rallying cry for a new asset class. And I think Goldman set us back a bit. I think Paul Tudor Jones a few weeks ago set us up a bit. We're going to have this back and forth. This skeleton for this is being put in place. These are growing pains. And we have not lost one bit of confidence that this is going to be a huge asset class.
This is a reasonably long time frame. It's more of a tide than a wave. I think in 10 years, I don't want to call it digital gold because it's so much better than that, but it will be a mainstream asset. That's my firm belief.
If Bitcoin were just to take 10% of the gold market, we're talking about a $45,000 price. I think that's easy, and that's just one use case. I think that it's going to be scary.
Are we getting told to shut up?
Time's up.
So Tether is backed 1-to-1 by reserves. It's also registered one with FinCEN and works globally with regulators, with law enforcement. I think that we were able to prove that Tether is pure legitimate business. And there is nothing to fear about.
Is Tether a soundly regulated product that consumers can trust?
I think it's not a regulated product. I mean, there is no regulator of it.
I believe that it's fair to say that Tether is something that people can put trust in.
We're in the really early days of this. The next 5 to 10 years, I think we're looking at moving into trillions of dollars that are tokenized and function as digital currency. And so I think you're going to see a growth in the number of, at a minimum G20 and probably far more. But then within the US dollar space, I think it's going to end up being kind of a power law curve. I think 70, 80% around a particular standard. So there really isn't a business model in payments in 5 or 10 years, at least not one where you're taking a cut or taking a transaction fee. And I don't believe there's going to be much of a business model in storing cash either. People who are building business models around money and digital money have to think more about what is the value they're providing as a utility to society, to businesses and others that doesn't involve extracting these fees, because those fees are going to zero.
Jerry, the hook is coming, the guitar hook. So you got about 10 seconds.
In terms of my favorite data product, which is not one that I am a part of, I use Masari a lot. So good job, guys.
Once you start looking at stakeholder behaviors within stablecoins, you'll see that DAI is really the only one that is being used deeply for decentralized finance, while Tether is mainly being used for ARB. I would like to see much more of these types of real indicators. Well, what type of usage, not just our tokens being moved around, but what type of usage is occurring for these types of assets?
Some of these assets are really challenging to audit by definition, by their very nature. I mean, I think it's something that collectively as an industry we should do. It's one of the most important things we can work on is just getting more certainty around supply.
Being a market data company, people think that market cap is a market data point. It's just something that for me is key from a industry growth and institutionalization, very hard word to say, perspective, is really just kind of getting an idea of what is actually the size of the cake.
Well, we're right on time.
I've been listening along this morning. It's been a lot about Bitcoin as an asset and digital currency as an asset class. Now we're going to talk about it as a technology. They're always trying to improve sort of 4 key areas. Better privacy, which makes it harder to censor transactions. Better performance, which makes it easier to run a full node and therefore makes the network more decentralized. Better robustness, making it harder to attack in general. And then functionality. What do the companies that build on Bitcoin really need? Mainstream adoption doesn't mean institutional adoption. It doesn't mean a bunch of really wealthy people holding Bitcoin as an asset to protect their wealth. Mainstream adoption to me means that people, everyday people, are actually using this network, whether that's holding because it's part of their savings, or whether that's using the Lightning Network to make payments, not just replicating Wall Street all over again on a crypto network.
And in the last week, this Goldman Sachs report came out, and I saw people on Twitter responding and being really upset. And I was thinking, like, who cares?
If Goldman Sachs likes it, that means we're doing something. I think that means we're doing something wrong. We don't want Jamie Dimon saying Bitcoin's great. We're building Bitcoin to be around for, centuries.